Welcome to the show. Let's talk to an economist. His name is Sean Richards. He is a not a yes man economics. Morning to you, Sean.
Morning.
Right, UK manufacturing. What's going on in UK manufacturing?
Well, there's some actually quite good signs there. Those that watched last week's video that we did, I suggested that there was something in the Bank of England data that hinted there might be a pickup. And what that was in the lending data, it showed that they were particularly lending to manufacturers, which looked hopeful. And I said back then maybe that this was finally evidence of a J curve coming in, which for what people don't follow is when an exchange rate changes, it takes a while for the actual real things in the economy to adjust. You can't just do things overnight. Right. It takes a while to plan and do it. And the question is how long? So a year and a bit down the road from the sort of big sterling fall, we're starting to wonder if that was happening. And in the meantime, since then, there have been a few other numbers that come in. Many of these are sentiment indicators, but for example, market, excuse my voice, when they do the PMI or purchasing managers numbers, again showed strong manufacturing. Boost from the export side, so again hope on the same theme. And this was backed up yesterday by the EEF, which I think was the Engineers Federation from back in the day, again saying the same thing. Export orders very strong, manufacturers producing at a high level. So all of these things are good. It's a nice theme for the UK. It is consistent. The only cautionary note is so far the official numbers aren't picking this up. So that there's a thing here and we'll have to wait to see whether they do. They're a bit delayed compared to the others, but even so, they should have been picking this up so far. However, everything else, CBI, market, virtually everyone that looks at this sort of thing thinks we're in a boom. And where this would be a real change is, and kind of two themes of my work, really. One is that for quite a long time now, the UK has been essentially a services economy, and that's been the only sector that's grown. So this would be a hopeful phase for manufacturing. We had another one about 3 years ago, I think, but that fizzled away. And also the fact of returning to the manufacturing point that, you know, production and things like that in the UK economy still smaller than before the credit crunch. Okay, so I've got two questions for you.
Fire away. 50-50 chance of a recession in the UK, read the headlines in the newspapers recently. Okay, if the manufacturers pick up, is that going to make a less chance of a recession? And number two question, data came out on new car sales and new cars, and this was collapsing. Is that not part of the manufacturing picture, a big part of the manufacturing picture?
Yes and no. I'll answer the second question first because it's easiest. That the cars that we are mostly sold here, ironically, we're dealing with German and European manufacturing, not our own. We import the vast majority of it. Most of our own car production goes overseas. So in terms of the car numbers, it'll affect on things like consumption and retail sales, or depending on how you do that because so many people lease the cars. But anyway, it'll come in the numbers that way. But the main effect on production, ironically, will be abroad. So there's a factor. What was your first one again? Sorry.
In terms of what I was saying, that the headlines were suggesting a 50-50 chance of recession, which obviously is in the back of my mind. I think things are slowing down, and we're saying actually in the manufacturing things are picking up. Are they opposites as opposed to equals?
Possibly. It depends. I mean, we do export quite a lot of services as well, so hopefully there should be a gain there. The numbers for them weren't quite so good, again, if we look at this week's business survey. However, that was very mixed, and I'll tell you why it was mixed, because it told us output was down, but then it told us backlogs are up. How does that work? Why would you? And also, that employment was up. Now, if we look forwards, this is where this gets a bit difficult, because growth's quite slow, and if you look at the margins of areas in the numbers, it's quite possible we could have a quarter where it goes negative. That might not mean anything, again, looking at the margins, because we know this year we haven't done a lot anyway. But I'm not a particular buyer at the minute that somehow or the other we're going to fall off a cliff. People have been saying this since the EU leave vote, haven't they? In fact, it was a 100% chance, so we were told this time last year. So, of course, it's not impossible. Things could fade away. There was a bit of slowing in Europe this week, but I'm not a particular buyer into the fact that the world's going to end, simply because if you take the view I had before, why was this year going to be hard? Because inflation picked up. It was going to hit real wages.
And that's all that oil, right?
Yeah, that's quite a bit of it. Other things are happening. I mean, if, for instance, something else I was looking at this morning was a copper price. I think that's at
3-year highs.
Yeah, so there are other factors out there. But when you look a more sort of base level. One of the places I look for a base level is the United States, because it has the dollar, then there's not really currency effects, it buys things in dollars mostly. And inflation there has been drifting away a bit, 1.8% to 1.4% on the measure the Federal Reserve uses. So,
well, my view is inflation is dead. There you go, that's a headline.
okay, but you see there, and here's a catch, I'm presuming you mean consumer inflation.
Yep.
The other side of the coin, asset price inflation, we've seen a hell of a lot of in the credit crunch here. And that's been a big deal.
The richer got richer, right?
House prices, share prices, again, it's very difficult in a share price defining what's genuine growth and what's inflation. But I think prices have been driven up to there. I think house prices are a lot clearer, particularly in London.
Sean, thought-provoking as always. Thank you very much indeed.